Imagine a legal tax loophole where every dollar your investments earn over your entire life goes entirely into your pocket, and the government cannot touch a single cent of the profits. It's called a Roth IRA. The mechanics are simple. You pay taxes on your income right now, before the money goes into the account. In exchange, every dollar of growth, every dividend, and every withdrawal you make in retirement is completely tax-free. This line graph tracks a person starting at age 25, putting just $200 a month into a Roth IRA. If they invest in a standard S&P 500 index fund, averaging at 10% annual return, that steady stream of $200 deposits grows to over $1.2 million over 40 years. Look at what happens if you try this exact same strategy in a normal, taxable brokerage account. When you go to sell your shares in retirement, you owe capital gains taxes on the profit. That tax bill will easily eat up $200,000 to $300,000 of your money. Inside the Roth IRA, you keep that money. Today, we are going to open and fund your account in the next 5 minutes. All you need is your Social Security number and a login to your bank. Taking 10 minutes to set this up moves you out of the cycle of holding cash that loses value to inflation. It puts your money into a legally sheltered environment designed specifically to compound into massive long-term wealth. Because the tax advantages are so extreme, the IRS places very specific rules on exactly who can use this account. Let's make sure you qualify. This graphic shows the 2025 income limits. To contribute the maximum amount, you must earn less than $146,000 a year if you file as single, or less than $230,000 if you are married and filing jointly. If you meet those limits, you can contribute up to $7,000 this year. The rule here is that your deposits must come from earned income, like a salary or self-employment wages. Passive income, like rent from a property, does not count. You can pull out your original contributions at any time without a penalty. But to withdraw the massive pile of earnings you generate tax-free, you must be at least 59.5 years old, and your account has to be open for 5 years. Following these IRS rules exactly ensures you never trigger early withdrawal penalties, and it perfectly maintains the legal, tax-free status of the wealth you built. Step 1 is choosing where to open the account. You want a zero-fee provider with a simple interface. Fidelity, Vanguard, and Schwab are all excellent options for beginners. Go to the website of whichever provider you prefer, locate the navigation menu, and click the button that says Open an Account. This is where people make their first mistake. The menu will ask what type of account you want. You must click Roth IRA. Do not click Traditional IRA, as that account operates under completely different tax rules. Next, you will fill out the required registration forms. The platform will ask for your full legal name, home address, date of birth, and your Social Security number. Entering your Social Security number online might feel uneasy, but it is a legally mandated step. The brokerage has to verify your identity with the federal government, so the IRS knows exactly who owns this tax-advantaged account. Once your account is officially open, the platform will prompt you to connect your checking account. Go ahead and initiate your first deposit. Even $50 is a perfect start. Right here is where thousands of beginners fall into the cash trap. They transfer the money, log out, and assume they are now investing for retirement. They aren't. This diagram shows how the system actually works. A Roth IRA is just an empty bucket with a special tax label slapped on the side. When you drop cash into the bucket, it just sits there. To make it grow, that cash must be converted into actual investments inside the bucket. To do this, locate the trading search bar in your dashboard. Type in the ticker symbol for a standard S&P 500 index fund or a target date retirement fund. Once you bring up the fund, enter the exact dollar amount of the cash you just transferred into your account and hit the buy button. Executing this buy order is the specific action that activates compound interest. It immediately turns your dead cash into a working financial asset. Your primary task is complete. You have officially established a fully functional, tax-free retirement vehicle. To guarantee you reach your retirement goals, your final action is to set up an automatic monthly transfer. This ensures your wealth builds silently and autonomously in the background. Setting up a recurring deposit removes human emotion and forgetfulness from the equation. It guarantees you continuously hit the principal deposits required to keep that $1.2 million trajectory on track over the decades. Drop a comment below if you opened your account today, and make sure to subscribe to the channel for more step-by-step financial guides. Mastering the Roth IRA is about taking control of your resources. You are building a system that weaponizes compound interest today, so you can buy back your future time and freedom.